Yo, what up, guys? How are you all doing? So, welcome to the first module of our cryptocurrency trading course for beginners. Recall that we had already introduced this course in the first episode, and if you haven't watched that, I'll be dropping the link somewhere on this video at the description section of this video so that you can just quickly hop in there just to keep yourself abreast of our move so far. So in this episode, we're going to be looking at what are cryptocurrencies, types of blockchain, types of cryptocurrency, and then finally, we're going to look into what tokenomics are, right? And before we dive deep into that, please, if you are new to this channel, kindly hit the subscribe button. Share this video if you find it interesting. Share the channel to your friends and well-wishers, especially those whom you want to educate, or those who are interested in learning everything that has to do with cryptocurrency trading. And of course, by so doing, you will be helping us to expand and reach more audiences as we just started this new baby channel. All right, so let's get deep into that. So what are cryptocurrencies? Of course, a lot of persons have given many definitions to what cryptocurrencies are, but simply put, I just see them as digital money, right? Because cryptocurrency is actually a parent word which comprises of two words. We have the crypto and then we have currency. So, we have crypto and then we have currency. That's the singular now, right? So simply put, cryptocurrencies are digital money. That's the simplest definition you can give to the word cryptocurrency, just digital money. So here I said is a tokenized asset that represents value. And also, it's necessary for us to understand that it's not all cryptos that are created equal. Some are higher than others. More, uh, some are higher in value than others. Some are lesser in value than others. Some have more utility than others. Some have more use case than others. So we need to understand that. And one of the beautiful things about cryptocurrencies is that it has a low barrier to entry for trading, especially for retail traders and investors like us. It is easy for anybody to come in there. It has low barrier, unlike other established markets like the forex market, like the stock markets, which requires a level of technical know-how. Beyond the technical know-how, there are still some things that are required before you can dabble into them. But cryptocurrencies and cryptocurrency trading has a very low barrier to entry for retail investors and little traders like us. Okay, so yeah, cryptocurrencies also serve the purpose of international transfer of value. In other words, you could send money to you could send it crypto to someone in another country or even another continent, right? That's the monetary value of whatever it is you want to say. You could send the person that very amount of money in form using crypto, right? So like I've already pointed out, that it is a 24/7 market trading. It doesn't close. There is no off day. There is no break. It is always open 24/7. It also serves as a digital representation of value, and of course, many persons use it as a means of investment and of course for trading. Okay, so these are just the definitions and also the uses of cryptocurrency. So going ahead, we'll be looking at types of blockchain and types of blockchain currency. And firstly, we have the Bitcoin, we have the Litecoin, and we have Bitcoin Cash. And I think this Litecoin is a fork of Bitcoin, and then Dogecoin is also a fork of Litecoin. So Dogecoin is a fork of a fork, right? So Litecoin was forked out of Bitcoin, and Dogecoin actually a fork of Litecoin. And then we have stable coins, and it's necessary for us to understand that these stable coins, of course, they are not blockchain. Okay, so and then all these stable coins, one of the things they particularly do is that they help to keep a ledger of people who are actually transacting. That's basically what stable coins do, right? They help to keep a ledger of people who are transacting. And stable coins, they're a bit different from these other cryptocurrencies we mentioned, in the sense that they are usually not their own blockchain, right? They are often not their own blockchain, because when you look at this blockchain currencies we just mentioned, Bitcoin, it has its blockchain. We have the Litecoin, which has its blockchain. Bitcoin Cash, which has its blockchain. Dogecoin, which has its blockchain. So they are different from these stable coins in the sense that stable coins, they don't have their own blockchain, but they are built on different types of blockchains, which are known as smart contracts. So that leads us to the next topic we'll be looking at, which is what types of blockchain smart contracts. Then in no particular order, we have the Ethereum, we have the Ethereum smart contract, we have the Binance smart contract, we have Solana smart contract, Polkadot, Tron, Cardano, and the rest of it. So one might ask, what is a distinguishing characteristic? What makes smart contracts different? Smart contracts are actually different in the sense that they serve as a parent crypto. Let me put it that way. I hope I'm getting my drive now. They serve as a parent crypto in the sense that other projects can be built under them. Other projects can be built on this smart contract. For instance, when we talk about Ethereum is actually a smart contract. There are other projects which are also built on Ethereum as well. So we have the Binance coin, which is a smart contract on its own. There's a lot of other projects which are also built on the BNB, that's the Binance Coin smart contract. The same thing also applies to Solana. There are lots of projects which are also built, which are currently built, and some are still building on the Solana blockchain. So these are just the major things we need to know about smart contracts so that you know where you're putting your money into. Whether you're investing on the smart contract itself, or you're investing on the project which is built on that smart contract, please, it's necessary that we understand this, right? So now moving ahead, we get to understand types of cryptocurrency token. I've already mentioned it in the beginning that all cryptocurrencies are not the same. Some have higher value than the other. Some have more utilities than the other. Some have more use case than the other. So it's good we understand this so that you know what you are getting yourself involved with. Okay, so now we have the currency tokens. Currency tokens, which most times we call them payment tokens or transactional tokens. They are just digital assets which are designed, and what they basically do is that they help to facilitate transactions, and you could also use them as a store of value, and also they enable exchanges. Some of examples include, we have the Bitcoin, which is actually a currency token. We have Ethereum, we have Litecoin, we have BCH, that's the Bitcoin Cash, we have Stellar, Ripple, and the rest of them. So these are a few examples of currency tokens, right? So moving ahead, we also have the protocol tokens. Protocol tokens are just almost the same thing, that also the digital assets. But basically what they do is that they power and they also secure and incentivize specific blockchain protocols, which also enables various functionalities. And examples include, we also have Ethereum. So one thing we need to understand is that it's possible for one particular currency to serve as a currency token. Also, it's possible for one cryptocurrency to serve as a currency token and also serve as a protocol token, right? So one particular crypto can have multiple or dual functions. We need to pretty much understand this very well. So examples of protocol tokens, we have Ethereum, we have Solana, we have Polkadot, Cosmos, and the rest of them. We have Uniswap and the rest of it. So there are quite many of them, right? So basically, as I said, what they do is that they help to facilitate what we call consensus mechanism. I really do not want to use much jargons in this very course, because of course it's basically for beginners. So I do not want to use high sounding words that would get us confused. So that's why I'm dumbing everything down to the level we can all understand, especially as a result, especially because we are just trying to understand what this industry is all about. Okay, so moving ahead, we also have the exchange tokens. Okay, so basically exchange tokens, they also they are issued by cryptocurrency exchanges. For instance, we have the Binance exchange, then we have the BNB. BNB is Binance native token, which is also its exchange token. So basically what they do is that they have to provide benefit and discount, especially for those who are using it. In other words, let's say you are holding BNB tokens, which is the native token of Binance Exchange. And then if you're trading, if you're doing your transactions there, you're going to be paying lesser fee because the fee would be taken out of the native token you're holding. Your transaction fee will be taken out of the native token you're holding. So you'll be paying lesser fee. So it incentivizes those people or those traders or those investors who are actually using that very exchange token. Okay, so examples include we have the BNB, which is the Binance exchange token. We have the HT, which is Huobi token. The Huobi is one of the exchanges we have. We have we have KuCoin shares, which is the native token of KuCoin exchange. We have the OKB, which is the native token of OKS. I'm just, talking about these things as they are coming to my mind. And then we have BFX, which is the native token of Bitfinex exchange. There are just many of them. So basically, these native tokens, they are original to exchanges, right? They are original to, they are local to exchanges. You mainly get these native tokens from exchanges, right? So that's pretty much on that. Then going forward, you also have the privacy tokens. So what they do is that they help to provide enhanced privacy and anonymity for transactions and users. So many people, especially those people who want to be anonymous, who do not want to, who are very intentional about keeping their privacy on the internet, most times they prefer to do their transactions with privacy tokens. So basically, what they do is that they help to provide anonymity and they help to provide security and privacy for users. And in no particular order, we have examples. We have Monero, okay? We have Monero, we have Zcash, ZEC, right? We have Dash, we have Veg, that's SVG. We have Bitcoin. We used to have Bitcoin Private, and then we have PVX, that's PIVX. These are examples of privacy tokens, right? So going ahead, we also have the utility tokens. So basically what they do is that they provide access to specific products, services, or platforms. So when you have these utility tokens, it grants you access to products or services. Some of the examples include we have Fil, that's Filecoin. We have Fil, that's FIL, that's Filecoin. We have Siacoin, that's SC, which serves the purpose of cloud storage. We have just trying to remember them. We have BAT, that's Brave Attention Token. This very BAT, right? Brave Attention Token, which basically serves the purpose of advertisement and the rest of it. We also have OGO, which is a decentralized prediction market. That's REP. Okay, so we have Form, which serves the purpose of online gaming platform. We have Engine Coin, which is basically a gaming community platform. So there are just many examples of them. We have CVC, that's Civic. We have Numeria, if I can still remember them very well. So there are just quite many of them. We have Uniswap, which is actually a decentralized exchange. So these are few examples of utility token. We also have some of the stock tokens. Okay, so most times these stock tokens are also known as security tokens or equity tokens. You could call them security tokens. You could also call them equity tokens. Remember what I said, that it's possible for one particular coin to be performing dual functions. Like you could be doing this, you could also be doing, it could serve as a protocol token. It could also serve as a privacy token, as the case may be. So it's good we understand that. So we have examples of this stock token. We have the Coinbase stock, the coin. This Coinbase. The Coinbase, they have their coin, their own coin, which is just COIN. That's pronounced coin. That's Coinbase stock token. We have the Tesla stock token, that TSLA. Some exchanges, you can trade these stocks, this stock token on some exchanges. Okay, so we have the Apple stock, which is tradable on some exchange, that's AAPL. We have the Amazon stock, that's Amazon, AMZLZN. We have the Google stock, and we have Facebook stock, and the rest of them. So these are just few examples of the stock tokens. And then we have the AI tokens. Okay, so basically these AI tokens, they are just digital assets which helps to power artificial intelligence. They help to facilitate machine learning. They also help to facilitate data-driven projects. And we have still some few examples. We have Singularity Net, that's AGI, Singularity Net, which is an AI marketplace and a decentralized AI network. We also have Fetch A1, that's which is an AI-powered decentralized finance and Internet of Things, that's IoT. So we have Ocean Protocol, we have Cortex, we have AI Doctor, that's IDOC, AIDOC. That's one of the examples of these AI tokens. And then we also have Hedera hash graph, if I can still remember vividly. We have Hedera hash graph, that's HBAR, which is also an AI-driven distributed ledger technology. Okay, so that's pretty much on what this AI tokens. Then we have the NFT. NFT simply means non-fungible tokens, right? When we say something is non-fungible, it simply means that that thing is unique and that can be replicated, right? So unlike these other types of tokens we mentioned, it's possible for you to exchange one for another. It's possible for you to sell one to buy another, right? But they are quite different from NFTs in the sense that they are non-fungible. You can't change them for another, okay? So basically, every NFT contains a digital signature, which makes each of them unique. So what we do in this cryptocurrency, especially when it has to do with NFTs, is that most people, because it's just one, they can trade it. And once it's traded, it means that it's just one person that has it. Okay. So that's one beautiful thing we need to know about about NFT. Though, as I rightly said, people actually trade them. So we have, I could remember when the NFT thing, when the craze was everywhere, we had Rarible, which is a digital art marketplace. We have Super Rare, which is a digital art platform. We have the CryptoKitties, which is a digital collection of cards, a digital collectible cards, and the rest of it. We also had the Central Land Mana, which is a digital real estate. If I can remember, if my memory serves me right, because these are a bit old, so I'm just trying to refresh my mind on them. And then finally, we have the meme coins, right? Basically, these meme coins they are just inspired by internet memes. They are inspired by humor. They are inspired by pop culture. So people just create them for fun. They don't really have any substantial in backing them. So most time people just create it for fun. That's why we call them meme coin. They are not really serving any real value. They are not fulfilling any use case. So we have an example. We have Shiba Inu. Could remember during the last bull run, Shiba Inu, we have Dogecoin, we have there used to be useless Ethereum token, which is UET. You can imagine the name, useless Ethereum token, which was actually a satirical token which highlighted ICO hype during the era of ICO, when ICO was everywhere on the air. So they created the useless Ethereum token, that's UET. We have a dental coin, that's this which is a dental themed coin with a humorous approach. We had insane coin. We have Monkey Project, that's Monk. We have Banano, which is Ban. We had Cheese Coin, quite a lot of them, right? So basically, like I said, these meme coins or these shit coins, they don't really have anything substantial backing them. Most times they are just created for fun, just people trying to catch fun on the internet, or maybe just to make a hype of, make fun of what is in vogue, right? So these are just what meme coins or shit coins is all about. So finally, we get to the last episode of this very module, which talks about tokenomics, right? So in your journey into this very space, you'll be hearing about it. So basically, what is tokenomics, or what are tokenomics? When we talk about tokenomics, we are simply looking at the crypto value of a particular cryptocurrency in dollars. We are looking at the supply of that particular token. We are looking at the volume. So tokenomics simply means the information concerning that very concerning that very cryptocurrency or concerning that very, what is the information? What are the things available? What is the supply? What is the current value in dollar? What is the market capitalization? Who are the cryptocurrency holders? Who are what? How often are they burning their tokens, ICOs and IDOs and all that? So a lot of talks. Let's just go to let's go to CoinMarketCap to look at these things very well. Let's just look at the real life example of tokenomics, right? So let's just go to coinmarketcap.com. Look at it here. Look at it on my search bar. It's actually one of the places where you can do your analysis, where you can do your tokenomics on any particular coin you're interested in. So in front of us here, in front of our screen here, we have a list of different cryptocurrencies. There are hundreds or should be thousands of them, of course. So, but then we are just going to focus on just one. Let's just focus on Bitcoin, right? So currently the price of Bitcoin is at 63,891. In the past 1 hour, it has dropped by 0.28%. In the past 24 hours, it has dropped by 1.3%. In the past 7 days, it increased by 7.7%. Currently, the market cap is about 1,261,318,533,824. So one might ask, how do we get the market cap? How do we calculate the market cap of a given currency? If you tap on this information, you see that there's an information, there is an explanation here. They say the total market value of a cryptocurrency circulating supply, it is analogous to the free float capitalization in the stock market. Market cap equals to current price times circulating supply. So when you check the current price of BTC now, which is around $63,900. Now multiply it by this current circulating supply. That would give you the market cap. So currently the circulating supply, look at it, the circulating supply of BTC is this 19,744,671 BTC. That is the current circulating supply. And then multiply this by the current price of BTC, that would give you the market cap, right? So most times it's believed that the higher the market cap of a currency, of a crypto, of a coin, right? The higher the market cap, the higher the value, the higher the price. So as it stands now, BTC has the highest market capitalization. Probably that's definitely why it is the highest when it comes to the price. So that's pretty much it. So the higher the market cap, the higher the price of the currency or the coin in question. So that's pretty much that. This is just what we mean by tokenomics. You're looking at the supply. We've gotten the supply, gotten the circulating supply, we've gotten the price value in dollars, we've gotten the market cap, the volume, and the rest of them. So we could still dig further on the tokenomics. Just tap on this to get more information about the very coin you're looking at. So let's just tap on it, and then it's opening. So you can now, when it opens on the coinmarketcap.com website, you can now go further to get more information that you need from that, the more information that you need concerning the very cryptocurrency it is you're interested in. Of course, we are focusing on BTC. So these are the different exchanges, all these things you're seeing, these are the different exchanges where BTC can be traded. That's what we have. That's where you have Bitcoin market. So these are the different markets. We have the centralized exchange, that's the SEX. We have the DEX, that's the decentralized exchange, spot, perpetual, futures, and the rest of it. So when you click on all, it shows you the various places, including SES and DEX, where BTC can be traded. And so there are just many exchanges where BTC can be traded. So looking at this is just the chart, right? This is just the chart. And then this is 1 day chart. That's 1 day chart. It gives you an information of how the how BTC has been performing. Now on the left-hand side of the chart of this screen, we have the more information concerning BTC. We have the market cap, which is this. We have the volume in the past 24 hours, which has dropped by 41.28%. And then circulating supply volume in the past slash divided by market cap in the past 24 hours gives you that value. So we have the total supply, and then we have max supply. Okay, so total supply and the max supply. Total supply simply means what amount or what quantity of that currency or of that coin, or what quantity of BTC is currently in circulation. That's the total supply. Then we have max supply. Max supply simply means what is the maximum amount of BTC that can be available, that we can ever have. So here we are seeing that the max supply of BTC is at 21 million. And so far, the total supply is about 19.7 million. So telling you that BTC, they are very soon, there won't be any, very soon, all the BTC available would be in circulation. That's what this thing simply means. That look at 21 million, 19 million, very soon, all the BTC would have been in circulation. So there would be none in reserve. Everything would definitely be available. So when that happens, what it implies is that the price of BTC is going to skyrocket. So that's one of the things you also look out for whenever you're doing your token, when you're trying to check the tokenomics of whatever cryptocurrency it is you're interested in. So you can also get more information from their website. You can also get more information from their white paper. So when you click on this now, the white paper is going to come. You're going to see a document. It's a doc, right, that gives you detailed information about that, and then how it's going to go, the distribution and the rest of it. So that's what this every crypto will always have this thing. So once you just go to either coinmarketcap.com or coingecko.com, you can always go to the website and get all this information. You could just decide to download it and read it on your own for you to understand how the projection, the futuristic projection and the distribution and the rest of it concerning that very cryptocurrency it is you are interested in. So that's basically all that has to do with tokenomics, right? So let's go back to where we were. Okay, so we are gradually coming to the end of this very episode. So to recap, to summarize what we've learned so far, we've understood that cryptos are tokenized assets, that there are many types of blockchain, and also there are many tokens which are also available for different uses. And then we understood that NFTs are unique and cryptos are fungible in the sense that they can be exchanged from one to another, right? From one form to another. That's what we mean by fungible. Unlike NFTs, which are non-fungible. In other words, there can only just be one of it available. And then we have we learned that each token is a different prospect. So each is serving a different purpose. Each can also serve dual purposes. We were able to understand that. And then finally, we got to understand that tokenomics and token distribution, they are not really the same. Tokenomics simply talks about the volume, the price, and the rest of it concerning a particular currency. But token distribution simply talks about how the token will be shared, who gets what. For instance, the developers, the team members, what is their allocation, what quantity of that very token in question can be allocated to them. That's just basically what this token distribution talks about. Unlike tokenomics, which gives a holistic information concerning the very cryptocurrency in question. All right, guys. So this concludes the first module of our class. Remember, like I said, this is going to be a beautiful journey. We have a lot of things. So I just decided to segment them so that it doesn't get boring. So it will be a beautiful learning experience. So that's pretty much it. So please, if you like this content, kindly subscribe, share the video, talk about it. If you have any question, anything you need clarity on, could always leave it at the comment section of this video. And if you're looking for a community of cryptocurrency traders to join, welcome to our Telegram community. I'll be leaving the link also at the description section of this video. So till I come your way again, answer head, salute.